After we went through my auto insurance policy on this podcast, I had a bunch of people request, hey, can you do that for homeowners? There was an email that said, think it would be worthwhile to do a podcast in the future like you did recently regarding home insurance details and thoughts regarding coverages available under these types of plans. So let's talk for a few minutes about my homeowner's insurance. And I think first we'll talk about the policy as it used to be before we did our big home renovation, and then we'll talk about some of the changes that happened after doing the renovation. So I've got my policy in hand here from USAA. This was issued in 2010 when we bought the house. For dwelling protection, it was a $422,000 house at that point. Had $105,000 in coverage for other structures, $211,000 in personal property, and an unlimited loss of use protection for 12 months. Had $300,000 in personal liability and $5,000 in medical payments to others. The deductible was 2%, so it was an $8,440 deductible, and the premium for that coverage was $555.75. That included about $147 in credits and discounts. I do a bunch of stuff with USA. I have several insurance policies there. I bank there, etc., so I get some pretty significant discounts for that business. But the most interesting thing about these policies is to actually thumb through what's covered and what's not covered, especially what's not covered. And there's two big things you should be aware of in homeowners insurance that usually is not covered without a separate policy. The first is flood. Okay, flood insurance is one of those things that is generally not a part of your homeowner's policy. Now, you may live in an area like where we lived in Virginia, where the federal government literally requires you to get flood insurance, at least if you have a mortgage. I think they require your mortgage to require you to have it is actually how it works. So we had flood insurance there, but we were only 12 feet above sea level there. It was pretty smart investment, I thought. At one point during a hurricane, we had the floodwaters lapping on the front porch. It wasn't a porch, it was a stone patio, whatever it was. But it was literally, if it got a foot higher, it would have been into the basement floor, not the basement, but the first floor. And so that was a pretty no-brainer there to have flood insurance. There are lots of other places in the country where it makes sense to have flood insurance. And it's often, the federal agency that you're buying it through. And the truth is, I just heard this episode on Planet Money, I think it was, one of those NPR economics programs that was talking about flood insurance, which is apparently often dramatically underpriced. It's really a good deal for you if you live in a flood area, you're considering the risk that you're facing. So highly recommend that if you're anywhere near a flood area. And in fact, I know someone who had a storm drain back up and flooded their house in our neighborhood, which is not someplace you would think has much flood risk. And it was the flood insurance that actually paid for a whole bunch of stuff be ripped out of their first floor or their basement and get it redone. So flood insurance, you may want it, and you really consider your risk there and consider buying a flood insurance policy. But as I go through this losses that we cover and that we don't cover in this policy is pretty interesting. For example, this policy doesn't cover freezing of a plumbing, heating, air conditioning, or automatic fire protective sprinkler system. But that doesn't apply if you've maintained heat in the building. So if you shut off your heat, it may not cover freezing pipes and damage from that. Or have shut off the water supply, I guess, is another way to still have it be covered. Other stuff that my policy does not cover, freezing, thawing, pressure or weight of water or ice, whether driven by wind or not, to a swimming pool, hot tub, or spa, fence, pavement, patio, foundation, retaining wall, or bulkhead, or pier, wharf, or dock. Well, I don't have a pier, wharf, or dock up here next to the mountains in Utah, but, freezing of my hot tub is apparently not covered. Theft in a dwelling under construction until it's finished and occupied, not covered. Vandalism and malicious mischief or breakage of glass if the dwelling's been vacant for more than 180 days. Constant or repeated seepage or leakage of water or steam over a period of 14 days or more from within a plumbing, heating, air conditioner, or automatic fire protective sprinkler. Wear and tear, marring, deterioration, mechanical breakdown, smog, rust, electrolysis, or other corrosion, smoke from agricultural smudging, discharge or escape of pollutants, settling, cracking, shrinking, bulging, or expansion of pavements, patios, foundations, walls, floors, roofs, or ceilings. So that's a big expense, right? If your foundation settles, not covered in my policy. Birds, rodents, and insects, not covered. Animals owned or kept by the insured. So if your dog does the damage, it's not covered. Doesn't cover armadillos, bats, beavers, coyotes, ferrets, opossums, porcupines, raccoons, skunks, squirrels. So lots of things there that you should be aware of that are not necessarily going to be covered in your policy. The other big one is, besides flood, is earthquake. Okay, earthquake is generally not included in a homeowner's policy. So if you want that, you got to pay extra. And we think about this one all the time because we don't live that far from a fault in the Utah area. And earthquake is a very real possibility for us. Flood, not as much so. It would have to be a pretty serious backup for us to have flood on our property. But earthquake's a realistic thing. The problem with earthquake insurance is it's super expensive. You tend to have high deductibles, and it tends to be pretty high premiums. In fact, we actually put earthquake on this house after we renovated it. And 2/3 of the premium was the earthquake insurance. So pretty expensive. And the deductible for it was over $200,000. So we got to talking to the contractor that renovated our home of, how much damage are we likely to actually have in an earthquake and how much would it cost to repair? And he thought it could all be done for less than $200,000. And so we decided not to have the earthquake coverage, and we've dropped that. It's always an interesting debate around here. Some people have it, some people don't. One of the properties that I manage here, this is the office building for my physician group. We decided to put earthquake insurance on the property just because we felt like we had a fiduciary duty to all the other investors, all the other docs that own these syndicated shares in the property. But if it was just my office building, I probably wouldn't have it. I'm willing to run that risk. But be aware your policy probably does not cover that. So it was interesting when I went to get a policy on the new place after we renovated it. Well, we renovated it pretty nice. It's a really nice home now. And it's got a lot of nice stuff on the inside, aside from the expansion of the square footage. And so it turned out the value was high enough that we had to get a special policy, kind of a premium policy. We actually had to talk to different people that ask a lot more questions when they're issuing you your coverage. And it comes in under a different category, which naturally is going to be more expensive. But anyway, after all the discounts, thankfully we got a lot more discounts to go with this policy. We're paying, instead of $555, we're paying $1,274 for insurance. And so it's quite a bit more expensive, mostly just because it's a more valuable place to insure. We don't necessarily have any more, coverage on it. The dwelling's covered for enough that we could rebuild the entire house. Now, you don't necessarily have to insure the land, right? If a place burns to the ground, you've still got the land. That hasn't changed. But you need the whole dwelling covered. Personal belongings. We bumped us up a whole bunch. We decided we didn't have nearly enough money in personal belongings coverage, number one. And number two, they basically require you to have half the value of the dwelling in personal belongings coverage. I don't think we have quite as much personal belongings as we have coverage, but that was what they required. So about half the value of the dwelling is what we ended up having in personal belonging coverage. They throw in other structures covered. In this case, we got $150,000 worth of other structures being covered. That's just kind of standard for the policy. We don't actually have any other structures, so that's not doing us any good. Loss of use, again, unlimited. Our personal liability, again, is set at $300,000. Now, bear in mind, the umbrella policy sits on top of this, and the umbrella policy is what dictated that. They required us to have $300,000 in coverage on the cars, on the house, on the boat, etc. And then the umbrella policy stacks millions on top of that. And then medical payments to others was again set at $5,000. Our deductible is again 2% of the dwelling coverage, and so it's significantly higher than the $8,000 we had before. But it's still that 2%, which we could certainly cover out of our cash. And then we paid a little bit extra to have that higher personal injury liability. I think we're paying $14 a year for that. So overall, it's more expensive for us. We got more coverage. It's interesting as you go into the discounts and savings to see what they actually give you discounts for. We got it a discount of $135 because we have auto and home covered. We've got a discount because I have a couple other policies, including the boat that we got through USAA. That's a $56 discount, $22 because I bank with them, $22 because I have a life policy with them still. We got a $121 discount for the age of the home, $189 discount for being claims free, a $33 loyalty discount, a $65 insurance to value discount, I think because we chose to insure it to the replacement value. We got $22 off a year because we have an alarm, and because we got a brand new roof, we got $69 off. So lots of discounts that we qualify for there. Make sure when you get coverage that they understand the quality of the house, right? So we did all these upgrades. Now we have a really nice house. So we had to change those qualities in there. Like the interior finishes and features, instead of, being relatively basic, we got the premium. Same with the kitchen and bath, same with the general shape and style, same with the exterior finishes and features, right? We got some nice stonework out there. It's premium, and we want the thing covered. If the thing burns to the ground or whatever happens to it, we actually want the insurance company to build us a new house like this one. And so we made sure that it is appropriately insured. Don't cheap out on this. Make sure you actually tell them what you have so you're actually covered in the event that something happens to it.
My dad, your host, Dr. Dahl, is a practicing emergency physician, blogger, author, and podcaster. He is not a licensed accountant, attorney, or financial advisor, so this podcast is for your entertainment and information only and should not be considered official, personalized financial advice.